Hello friends, a very warm welcome to my channel. So in this new series, I'm trying to make videos on some specific stocks which our friends are requesting in the comment section, and most of them what I observe are the ones which they are stuck in, and they are stuck in those because they have fallen largely maybe 30, 40, 50% from their 52-week highs. And when we go deep, we will understand why these stocks have fallen and what should they do as investors, whether they should continue to hold them or they should exit them. So all these decisions can be made when we talk about this stock specifically, and we study them deep, reading their quarterly earnings calls and trying to judge what is going to happen in these companies in the coming few months. When it comes to the market has been very weak in the last couple of months, and there are no signs of recovery. In this Friday session, there was some recovery, but that was mostly inclined towards the Adani Group and the banking stocks. And obviously, banking stocks were showing some relief because Adani Group had raised some funds through promoter sale. So as of now, in the short term, the market sentiment continues to be weak. So as our view on the market still remains a little cautious in the short term, we are maintaining some cash in our portfolio so that we can allocate if the market surprises us on the downside. So these kind of market views we daily discuss on our Telegram channel as well. So every morning you get a message from me where I talk about how the market is going to behave that day. So if you want to read those messages, please do join my Telegram channel by searching my name on the Telegram. You can have a look at the bottom left of the screen. And if you're new to the YouTube channel, then don't forget to subscribe the channel and hit the notifications icon so that you can get all the notifications of the new videos. And now let's talk about the stock for today, which is Greenpanel. So broadly, we'll be dividing this video into 4 parts. In the first part, we'll briefly talk about the business model of the company so that we understand which company we are talking about. Then we'll discuss the recent Q3 FY23 results updates and understand how the company has performed year on year. Then we'll understand why the stock price is falling. We'll read what the management is mentioning in the earnings transcript, and we'll understand why the stock has fallen. And then in the last part, we'll talk about the valuations, we'll look at the chart, and we'll try to make our view as to what the investors should do in the present scenario and what could be the stock price movement in the coming few months. In simple words, Greenpanel is a company which is into a manufacture of plywood and MDF in India. And majorly their business is into MDF, and they are the market leaders in India. But the other competitors are also coming with capacity expansions, which we have to closely monitor. In terms of the size of the plant, they are the largest plant of MDF manufacturing in the entire Asia, and the company is headquartered in Kolkata. Now, when we talk about plywood of MDF, these are products which we see in our daily life and we easily understand. So it's very easy to understand simple business model. When we talk about the present capacities, leaving aside the capacity expansions which are going on in all these companies, in the organized sector, Greenpanel has about 6,60,000 cubic meters of capacity. Action Tisa has about 4 lakhs, Rushil Decor has about 330, Century Textiles has about 2 lakhs, and the other players which are in the organized segment may be having about 7,40,000. So this is just talking about the Indian manufacturers. Apart from this, there are other countries like Vietnam, Thailand, China, from where a lot of MDF gets imported into India or dumped into India, whatever you call it. So there is stiff competition for the Indian manufacturers from the foreign manufacturers in these countries. Now, after understanding the business model, let's talk in brief about the Q3 performance of the company. The revenue has more or less remained flat year on year. They have done a revenue of somewhere around 420 crores. And in terms of EBITDA, we have seen a downturn, and the EBITDA has reduced from 112 crores last time to just about 96 crores, which is a fall of nearly 14%. In terms of bottom line, which is profit after tax, it has gone down from 63 crores to about 37 crores, which is a massive fall of about 40%. And you can see the numbers clearly show the reason for the fall in the share price. There is a lack of performance in the recent quarters by the company. Now, why is the company unable to perform in the recent quarters? We'll discuss the reasons. There is stiff competition from the imports. See, earlier in this industry, there was anti-dumping duty which was introduced by the government. So the foreigners were not able to dump their goods into India at lower cost. Now that anti-dumping duty is removed, although the management has requested along with their industry partners to the government to introduce the anti-dumping duty again, but the government has not responded in the last 90 days. They are still hopeful that the government may respond, but the government also has responsibilities and they are answerable to the governments of the other countries against which they are introducing anti-dumping duties. So it's not a easy decision for them also. If there are anti-dumping duties introduced again, then it would be a boom for this company and the others in this industry, and their share prices will rally. But that totally depends on the government whether they do it or not, and that cannot be the only reason for our investment in the company, because we don't invest based on just chances of making money. So when we listen to the management talk that the price difference between the local manufactured goods and the similar quality imported goods is nearly 25%. So now you understand why the dealers are preferring to buy the imported goods. And when these companies are trying to export to other countries also, there again they have competition. Suppose they export to US. So the factories which are there in Thailand, which are there in Vietnam, China, they are also exporting to US. So there also they have competition from them, and that is why whatever the margins Greenpanel is making in India, that is higher than what they are making abroad, which is normally the opposite in the other businesses. So if they are trying to sell abroad, they are trying to export the MDF which are manufacturing in India. First thing, they are unable to penetrate the market. Second thing is, they are compromising on their margins and selling at lower prices when they are exporting. So their profit is further getting impacted if they are selling to other countries. Presently, the operating capacity is just somewhere around 76%, which was slightly higher earlier. So the capacity utilization has also gone down. Another thing which you have to observe is more or less 70-80% is their existing capacity utilization. So there is no room for much improvement in the volumes of sales, as the company is more or less fully utilized, and their new capex is going to get completed after more than 1.5 years from now. So till then, even if the company gets good demand from their customers, they will not be able to supply much because they are more or less operating at full capacities. So this also is creating headwinds for the company's growth. Now, when the imported goods are being dumped into India at lower cost, the company is presently not reducing their prices, and they are trying to maintain the volume at the similar levels which were there in the earlier quarters. But if this dumping continues or this further increases, they may even have to lower their prices to maintain these volumes. So there will be further pricing pressure on them, and the profit margins may further go down in the coming quarters. So these are some headwinds in the present near quarters. But if you look at from 1.5 year later perspective also, as Greenpanel is expanding their capacities, all their competitors are also expanding capacities, and their capacities also will get ready after a year. So what will happen after 1.5 year? All these companies which are manufacturing in India will have capacity expansions, they will have better quality goods. So there will be competition which will continue to exist after 1.5 year also, and there may be pressure on these companies to sell at lower cost to maintain their sales volumes. So what you understand, or what are your key takeaways from this discussion, is in the near term also the company is facing headwinds in terms of volume growth as well as the margin pressure because of competition from exports. And in the long term, maybe 1.5 year down the line, the similar competitive landscape will continue, and the competition will be from outside as well as from the domestic competitors. So the business is going to be highly competitive in the short term as well as long term, and massive growth in this industry may not be possible. I wouldn't say that growth is not possible, as the industry size will expand, people will move from using plywood to MDF. So as a market size also it will grow, but there cannot be massive growth as their competition intensity is going on increasing, and further there will be margin pressures on the business of the company. Now if you look at the chart, the stock made a high of somewhere around 600 zone, and from there on it is continuously declining. It has somewhere reached kind of a technical support, and that is why it's trying to consolidate now near this 250 to 300 zone. But still there are no signs of reversal on the charts, because the management commentary itself is not so positive, and even though the market is bouncing, this stock is not recovering much. When we look at the valuations, the current market price is somewhere around 285, which makes a PE 13. This is just an illusionary PE, because this has earnings of the old quarters along with it. When you see the price to earning ratio in the forward terms, and you see the similar profits which the company has done now, and extrapolate for the next few quarters, the PE will be much higher. So looking at the PE and thinking that the stock is cheap is not a good idea. In terms of market cap to sales, it is trading at somewhere just below 2 times, and the price to book ratio is 3x. So the valuations in terms of this revenue and all look reasonable, but the problem is the competitive intensity in this industry is growing so badly that the market may not be willing to give these companies higher valuations in the future. So the upside in terms of valuation also looks very limited. So looking at the business, looking at the valuations and the chart, what should the investors which are already holding these shares do? The first thing is, please do not take this as any investment advice. We are discussing this as a case study. So you make your own view after listening to the entire discussion. So what we feel is, as a business, the competition in this business is increasing to a large extent in the short term as well as long term. In terms of valuations, the market may not be willing to give this stock higher valuations. In terms of volumes, the company may not be able to grow leaps and bounds. And in terms of margins, there can be higher margin pressures in the short term as well as long term. So the future of this company does not look very bright in the near future, and the stock may continue to be in a consolidation mode. There may be small bounces here and there, and the stock may be consolidating for a very long time, maybe a year or two from here. If you are a type of investor who values time a lot, who wants to invest in shares which perform in the next 1 year or so, then you should, it will not be a bad idea to come out of this and switch to something else which has a higher growth, higher certainty of growth and speed of growth, so that you can recover your losses very quickly. But if you are an investor who can wait for maybe, let's say, 3 years or 5 years time, then obviously the industry will expand, the market will expand, and the stock price will eventually recover, and your loss will recover in a very long term perspective. For somebody who is getting attracted looking at this illusionary lower P's and wants to invest in the company, as the management itself is not giving great guidance about the company, as you have understood from our discussion, this stock remains an avoid for a fresh entry as of now, because there are better industries and better companies which are giving better guidances of growth where we can invest as investors. So this is our discussion about Greenpanel. I hope that this discussion was useful to you. I was able to add some value, some knowledge about this company, and this was helpful to decide whether you should hold the stock or come out of it. If you want me to talk about more stocks like this, please do mention those names in the comments below. I will pick up one of the stock from my upcoming videos. If you like the video, hit the like button and do share with your friends if they are holding Greenpanel. And thank you for watching and have a wonderful day.